Well, there's four main different structures available to you: sole trader, partnership, limited company, or a third sector enterprise. If you decide to set up as a sole trader or as a partnership, your only requirement is to register with Her Majesty's Revenue and Customs. You can do this online or over the phone, and really it's a case of submitting your details and then the business is actually established. So it's very easy to set up. You're not actually required to publish any of your accounts to HMRC. There's no ongoing paperwork, and you also only pay tax on the profits that the business makes. So as a self-employed individual, you will receive a self-assessment tax return at the end of March, which is the end of the financial year. And you will then declare on that tax return the income of the business, the expenditure of the business, and therefore any profits that you've made. If the business makes a loss, then you will not be liable for any tax on the business. The disadvantage of a sole trader or a partnership is that you have no unlimited liability. And what this means is that as a self-employed individual, you are responsible for the business. So if the business has debts that the business cannot pay off, then any of your creditors actually can seize your personal assets. So for instance, if you have a car or a home, then any of your creditors can actually seize the assets within that, which is obviously a disadvantage. With a limited company or third sector enterprise, there's much more regulation involved and much more that you have to do in order to set up the company. First of all, you have to register with Companies House, register the name as a limited company, and you also have to register any employees through HMRC. And you as the owner of the business are considered as an employee of the business, so you have to pay income tax and national insurance on a monthly basis, which you don't do as a sole trader. You also, one of the main benefits of being a limited company is the limited liability. So when we were talking before about the sole trader unlimited liability, on the other hand, as a limited company, you are restricted in terms of the debts that you're liable for. And that's because the business itself is the legal entity and you are an employee of the business. So any creditors that you have who you owe money to that can't be paid off from the business assets themselves, your personal assets will not be touched by your creditors. Limited companies are also considered as more reputable structure. So if you're setting up a business which deals with corporate customers, it can be a good idea to have to set up as a limited company, just because it's considered as more reputable, obviously because of the requirements that you have to register the company. A particular disadvantage of having a limited company is that you do have to publish accounts. So on an annual basis, you have to declare the income and the expenditure of the business through a profit and loss account, and that has to be submitted to Companies House. And anybody can actually buy that data from Companies House for £1. So any of your potential customers or suppliers can obviously get hold of that data and therefore find out the financial interaction of your business. And there's also ongoing regulation when you have a limited company. So you have to, any meetings that you have with other directors or shareholders, you have to minute those meetings and send again those on to Companies House. Any changes in the shareholders or the directors, you have to inform Companies House. So there's more paperwork involved in a limited company than there is in a sole trader or partnership. Well, regardless of whether you're setting up as a sole trader, a partnership, a limited company, or a third sector enterprise, you do actually need to register with HMRC, Her Majesty's Revenue and Customs. If you're setting up as a sole trader or partnership, it's quite a simple process. You register as self-employed through HMRC, and then you will receive a self-assessment tax return at the end of March. If you're setting up as a limited company, you set up the payroll system through HMRC. You also need to register the company through Companies House. Absolutely, it's very easy to change the structure of the business either from a sole trader to a limited company or vice versa. But it's probably a good idea to do that at the end of the tax year, because you are taxed differently within the two structures. It's more simple to do it at the end of the tax year.